For millions of Americans depending on Social Security, SSI, or SSDI, the secrets behind your January payment could make or break your financial year ahead. Greetings and welcome to this essential briefing. Today's details are crucial for retirees, older adults, and individuals with disabilities across the country, especially if your income comes from Social Security retirement, Supplemental Security Income, or Social Security disability insurance. We'll uncover the truth about January's deposits, what the elevated benefits really signify for your monthly budget, and how these shifts may impact your spending in the near future. You've probably seen startling percentages and urgent headlines, but what truly counts is the extra dollars that end up in your pocket and what you should realistically forecast. So, remain with me until the conclusion, because this knowledge will enable you to strategize, eliminate uncertainty, and secure your funds. Let's kick off by understanding why January is perpetually a pivotal month for recipients of Social Security, SSI, and SSDI. January is traditionally when annual benefit hikes kick in, and it's also a time when payment calendars, Medicare subtractions, and other tweaks can alter. For countless seniors, this is the instant they first notice the result of new cost of living updates and policy changes. That's exactly why so many scrutinize their bank statements more aggressively in January and seek to decode why their deposit might differ from December's. Now, plenty of you have heard talk of a hefty percentage boost being floated, with mentions of numbers like 9%. It's critical to apprehend what such a rise actually entails. When people encounter a large percentage, it appears like a gigantic surge in monthly cash. But the real consequence depends on your current benefit size. For example, if someone collects a lower monthly benefit, the cash boost will also be modest, even if the percentage seems impressive. On the other hand, individuals with longer career spans and larger Social Security benefits may observe a more substantial dollar jump. This clarifies how two persons can get the identical percentage raise but conclude with markedly distinct new payment totals. For Social Security retirement beneficiaries, the increase is attached directly to your core benefit. That means your new monthly amount becomes your standard baseline moving forward, not only for January, but for every single month of the year, unless other changes intervene. For SSI recipients, things can be a bit more complex since SSI is a program determined by financial need. That indicates that other income, living situation, and additional resources can sway your final payment figure. Why does January consistently matter so much for those on Social Security, SSI, and SSDI? January is when yearly benefit growth normally starts, and it's also when payment timelines, Medicare deductions, and other revisions can adjust. For many elders, this is the window they first feel the effect of fresh cost of living allowances and policy refreshes. That's why so many examine their account balances more closely in January and try to figure out why their payment might look unlike December's. Even with an overall uplift, some might not see the full advantage if other conditions lower their eligibility. For SSDI recipients, increases generally behave more like retirement benefits, where the change is added to your regular monthly deposit. Another key idea to grasp is that benefit boosts don't always mean you'll feel more affluent. Many seniors are dealing with climbing costs for groceries, housing, utilities, insurance, and medical treatment. So, while your check might increase, your bills could be escalating at the same rate. This is why considering the entire landscape, not just the raise itself, is so vital. Carefully crafting your monthly budget becomes even more imperative when prices persist high and surprise expenses can pop up. Now, what about those stimulus checks everyone whispers about? Let's address stimulus payments because many are still anticipating or hearing tales about new federal stimulus money. Currently, there's no authorized nationwide stimulus plan that functions like the earlier pandemic disbursements. However, some states and local initiatives might provide focused help, rebates, or tax discounts for seniors and low-income residents. These programs aren't universal for all and typically require eligibility founded on income, age, or household status. This means you shouldn't bank on hearsay or social media posts promising guaranteed stimulus cash, and you must always be suspicious of anyone offering quick money in return for private data. What's more steadfast for most seniors is mastering the regular benefit structures already established. Social Security, SSI, and SSDI remain the chief income source for millions of Americans. That's why knowing how these programs transform each year is more valuable than pursuing unreliable stimulus reports. Small, steady raises can be more advantageous over the long run than one-time payouts that don't fix ongoing monetary needs. But how can you ensure you're not overlooking hidden help? Let's also discuss Medicare, because this determines how much money you actually retain from your Social Security payment. Many overlook that Medicare Part B premiums are typically taken straight from Social Security checks. If Medicare prices climb, that can shrink the net benefit increase you spot in your bank account. Conversely, if premiums hold steady or fall, you might enjoy more of the benefit rise. This is why some feel disillusioned when they hear about a benefit hike, but then don't see as much additional cash as anticipated. Another factor influencing January payments is timing. Social Security doesn't pay everyone on the same date. Payout days depend on your birth date and the category of benefit you receive. SSI is usually paid at the month's outset, while Social Security Retirement and SSDI are paid on different Wednesdays according to your birth date. This means some may receive their enhanced amount earlier in the month, while others might wait longer. Understanding your payment schedule can ease anxiety and prevent unnecessary fret when deposits don't arrive concurrently with a friend or relative's payment. It's equally crucial to stay alert for scams during this period. Whenever benefit increases or stimulus gossip hit the news, con artists ramp up their efforts. They might send phone calls, text messages, or emails alleging that you need to confirm your details to get higher payments. Government agencies don't contact individuals in this way to demand personal or banking information. If someone pressures you, threatens you, or guarantees extra money in exchange for specifics, that's a serious alarm bell. Shielding your personal data is just as important as defending your income. Now, let's explore how seniors can maximize their benefits during eras of rising costs. One of the most significant steps is reviewing your monthly expenditures thoroughly. Knowing exactly where your money flows can help you uncover tiny savings that compound over time. Even minor adjustments in spending routines can make a difference when you're living on a fixed income. It's also useful to probe community programs that offer support with food, utilities, transportation, or medical services. Many seniors qualify for aid they aren't using simply because they don't know it exists. Another helpful step is ensuring your information with Social Security is always up to date. Changes in address, banking details, or marital status can affect payments and communication. Keeping your records precise helps avoid delays, errors, or missed notices. It also reduces the risk of fraud or identity troubles. Handling these details might not feel urgent, but they play a huge role in maintaining your benefit stability. For those still working part-time while receiving benefits, income limits are another important subject. Earning too much can temporarily lower Social Security payments if you're below full retirement age. Comprehending these rules can help you avoid surprises and plan your work hours intelligently. Many seniors enjoy staying active and earning supplementary income, but it's vital to balance that with how benefits are calculated. As we move through January and into the rest of the year, the most important thing is staying educated and pragmatic. Benefit increases are useful, but they aren't a complete fix for financial pressure. Cautious planning, safe decision-making, and reliable information are your best tools. You deserve stability, dignity, and calm after a lifetime of work and contribution, and understanding your benefits is one way to safeguard that future. Now, let's continue by examining how these benefit changes can affect different groups in diverse ways, because not every senior or person with a disability experiences these rises the same. Someone who has worked for decades and receives a higher Social Security retirement benefit will naturally see a larger dollar increase than someone who gets a smaller payment. This doesn't mean the system is biased, but it does imply budgeting approaches may need to vary based on your circumstances. For people receiving SSI, even a slight increase can be tremendously important, but it may also be affected by housing assistance, family support, or state supplements that can change the final sum deposited each month. It's also key to recognize that benefit hikes don't automatically solve long-term financial challenges. Many seniors are concerned about how long their savings will last, especially with escalating healthcare costs and the possibility of needing long-term care in the future. While Social Security is designed to provide a foundation of income, it isn't meant to cover every expense alone. This is why using benefits wisely and planning ahead remains extremely critical even when payments grow. Another topic that many ask about is taxes. Some Social Security recipients are shocked to learn that part of their benefits may be taxable depending on their total income. If you have other income from work, pensions, or investments, you may owe taxes on a portion of your Social Security benefits. This doesn't apply to everyone, but it's something to bear in mind when budgeting and planning. Understanding this in advance can help prevent stress later when tax season arrives. Healthcare is another major concern for seniors and people with disabilities. Medicare provides essential coverage, but it doesn't cover everything. Copays, deductibles, prescription costs, and services not fully covered by insurance can still create financial strain. This is why reviewing your healthcare coverage each year and understanding your options can make a big difference. Even small changes in plans or prescription choices can sometimes reduce monthly costs, which helps your benefit increase go further. Many seniors also worry about future changes to Social Security and Medicare. While discussions about long-term funding often appear in the news, benefits for current recipients aren't suddenly disappearing. These programs remain a priority because millions of Americans depend on them. Still, staying informed helps you prepare mentally and financially instead of being surprised by policy changes or adjustments in the future. Another important point to remember is that not all help comes in the form of cash payments. There are many programs that provide indirect financial support, such as help with energy bills, food assistance, transportation services, and medical cost assistance. These programs can reduce monthly expenses, which is just as helpful as receiving more money. Many seniors qualify for these programs but never apply because they assume they don't qualify or don't know they exist. Learning about local and state programs can sometimes provide meaningful relief without changing your Social Security check. Let's also talk about family support because many seniors today are helping adult children or grandchildren while also trying to manage their own expenses. While helping family can feel important and emotionally rewarding, it can also strain your budget if you're not careful. Setting clear limits and protecting your own financial stability isn't selfish, it's necessary. Your income must support your own basic needs first, especially when healthcare and living costs continue to rise. Another issue that affects financial security is debt. Credit card balances, medical bills, and other debts can quickly consume extra money from benefit increases. Paying down high-interest debt whenever possible can improve your monthly situation and reduce stress. Even small payments made consistently can slowly improve your financial position and give you more breathing room each month. Now, let's focus again on January payments and what seniors should watch for. If your payment amount seems incorrect, it's important not to panic, but also not to ignore it. Payment errors can happen, and delays can occur for many reasons. Keeping records of your payment history and knowing your expected amount can help you identify problems early. Acting quickly when something seems wrong can prevent long delays and larger problems later. It's also helpful to talk with trusted family members about your financial situation. Having someone who understands your income, expenses, and concerns can make it easier to handle problems if they arise. Financial stress can be heavy to carry alone, and support from people you trust can make difficult situations easier to manage. As we look ahead, it's clear that staying informed is one of the strongest protections seniors have. Understanding how Social Security, SSI, and SSDI work helps you avoid false information and fear-based rumors. It also helps you make smarter decisions about spending, saving, and seeking assistance when needed. Reliable knowledge allows you to feel more confident and less anxious about your financial future. It's also important to remember that you deserve respect and stability. These benefits aren't gifts. They are part of a system that you paid into or qualified for through your life circumstances. Receiving them with dignity and using them wisely is part of taking care of yourself and your future. As we finish today's update, remember the key points we discussed. January payments often bring changes, and benefit increases can help, but they must be understood clearly to avoid confusion. The size of your increase depends on your current benefit amount and your individual situation. Rising living costs can reduce the impact of increases, which makes careful budgeting more important than ever. Scams increase when benefit news spreads, so protecting your personal information is critical. And finally, many support programs exist that can reduce expenses even if they don't increase your monthly check. Staying informed, planning carefully, and seeking help when needed are powerful steps toward protecting your financial well-being. Your future matters, and your financial security is worth paying attention to. Even small actions today can make a meaningful difference over time. Thank you for spending this time learning about these important updates. Keep watching for reliable information. Keep asking questions when something is unclear. And most importantly, take care of yourself. You have worked hard throughout your life, and you deserve stability, respect, and peace of mind as you move forward. If this video added value to your day, please show your support by liking this video and subscribing to my channel for more crucial insights.